Top down, macro to micro. Big picture outweighs little picture. Forest to the trees. Chicken or the eggs? What am I talking about? Finding an advantage in the stock market. Hello, investors and traders. Deciding on which sector you choose will be one of the most important strategies you use in your investments. If the sector is doing well, chances are the stocks in those industries will also do well. If the sector is doing poorly, chances are the stocks in those industries will do poorly. So, is it about picking the right stock to be in, or is it truly picking the right sector? My spin on sector rotation is very different than the usual spin on this strategy. My investment strategy starts with a top down philosophy. So, you know the catchphrase: study it, analyze it, adapt it. This conversation will be about top down strategy explained with emphasis on using technical indicators to find the most powerful sectors. The top down approach to investing focuses on the big picture, or how the overall market is trending. Then it will look at the performance of sectors or industries, and ultimately stock prices. If the sector is doing well, chances are the stocks in those industries will also do well. Once you look at your market indicators and confirming the overall market is going higher, you turn your attention on the sectors. Three, four, five sectors that are extremely bullish, that have an upside potential, while the downside risk is lower. This exercise isn't just important, it's crucial. You need to study the market cycles. There is absolutely no doubt that sector analysis is just as important as overall market timing. It is one thing to talk about definitions, but let's try to overall look at how I would look at the sectors. Of course, I put in all my indicators into the macro view, and let's say look positive, which it doesn't always do. What I do next is I have a list of 100 ETFs or indexes in specific sectors. For example, gaming, semiconductors, technology, Bitcoin, industrials, the marijuana sector, robotics. I have all those indicators in one place. And what I do is I scan through those indicators and see which stage they are in. Are they accumulating? Are they in an advancing stage? Are they topping out, or are they falling down? You will be hard pressed to find a sector that is breaking down and trying to find the needle in the haystack. When I go through this scan, I have a number: 60, 70% on an uptrend, 40% on a downtrend. This indicator also helps me decide on the overall market. If the majority of sectors are in a downtrend, the overall market, of course, will not do good. If you look at the spiders and the industries of the spiders, if the majority of those industries are going lower, of course, the spiders, the spies, the S&P 500 will go lower. So the first thing is 100 ETFs or indexes that are in a specific industry. Are they 50, 60% above the moving averages? Great. Are they advancing? Great. This looks like a good sign for the overall market. But this video is about sectors and sector rotations. So let's look. Let's try to find the most powerful sectors out there. I want you to look at the end over here. Does this gaming sector look great? Does it look like you will find a lot of winners in this sector? No. You would be hard pressed to find a winner in the gaming sector. Now, is it possible to find a winner? Absolutely, but not easy. Let's go to the next one. This one, leisure and entertainment. Again, same thing. The market is breaking down for this. It will be very difficult. Now, if you look over here, it looks like November 2020. This would be a great time to get into it and get into those individual stocks. But for right now, as of today, it does not look like a good sign to get into these stocks. Let's go to the next one. Wait a minute here. The technology sector. Does this look like a positive sector to be in? Yes, this looks like a very positive sector. Now, is it overbought? Of course, you're looking at overbought. But which sector would you be in? The Titanic falling down or the technology sector? We're just talking about sectors now, not when to get into it on initial breakouts. Just which one looks the most powerful? Which one can you find winners in? And you clearly can find winners in this technology sector. Let's continue. Another one, semiconductors, technology inside semiconductors. Another one looking well. Let's continue forward. Now look at this, the cannabis market. Over here, do you think you can find one winner that can do well? No, it will be very difficult to find a winner right now in the cannabis sector. No matter how much they're talking it up, no matter how much they like it, you will have a hard time finding a winner. So find the positive sectors. I would love breakouts. That would be the best part. A macro picture doing well, a sector breaking out, find the individual stocks in those sectors. That's great. Do little buying to no buying, and in fact, shorting negative sectors when your macro picture says this is in a bear market, or we are going lower, or we are overbought. You must find which groups look the very best technically. The importance of this question cannot be overemphasized. It is consistently showing that if you find the right sectors, you will find the right stocks. Which few groups look the very best technically? Which sectors are outperforming? You will see if a certain sector is doing well and a stock is breaking out, it will outperform a stock in a poor sector that is not doing well. So again, find the sectors that are doing well. Find your indicators which show those sectors are doing well. You will see a greater percentage in the individual stocks that you pick. Pick the best performing stocks inside of a sector. Follow these 3-step process. You will find yourself heavily invested in the best acting stocks when the market is powering ahead and sitting on large cash reserves when the overall trend turns bearish. The next step is to look at the sectors. I have a list of over 50 ETFs, and I go through each one of them to see, are they on an uptrend or a downtrend? Even the sectors being a lot of positive sectors are showing it's a bullish sign. And if a lot of the ETFs are breaking down or bearish, it's a bad sign. But again, in the bullish pushed in the bullish uptrend, there will be specific sectors that outperform the rest of the sectors. All these stocks will perform better. A stock breaking out in a positive sector will outperform a stock breaking out in a negative sector. This is why the sectors are so important. You must put in many indicators, just like you did on the macro side, to the sector side. Find a super powerful sector or a few super powerful sectors and go long or short depending on the scenario. The last 2 minutes, I gave you a perfect scenario. First, I've always told you throughout all these videos, not one indicator works all the time. Not one indicator is the holy grail. It also works this way too. A lot of time you need to use what's called a weight of evidence, because not all the indicators will line up perfectly. Out of the 50 indicators, you are using a balance to understand which direction the macro is going, which sectors are the best, and which individual stocks are the best ones to use. So this is why a weight of evidence is important, because it won't line up perfectly, but there'll be a great percentage and saying the probabilities of this happening because of 10 indicators, 15 indicators, or 50 indicators is a good sign. I have seen that initial breakouts are the best time to get in. I have seen the first breakout the most powerful, followed by uptrends. And in the uptrends, I usually scale down when certain RSIs or RMO exit signals get high, and then when it backs down to reposition into certain positions. So again, the first initial trade is very powerful. Key takeaways for sector rotation. Zero in on sectors that contain the most exciting upside potential. The best out of the best sectors should be looked at. Then, the best individual chart patterns in the most powerful sectors. Do a little buying in weak sectors to no buying. If the overall market is in a downtrend, find poor sectors to short. If you are interested in sector rotation or sector analysis, please watch my top-down strategy explained and my investment strategy on this channel. Please subscribe and watch a video. You know what I'm going to say. Study it, analyze it, adapt it. Peace.